Now, ahead of the release of the October inflation data by the National Bureau of Statistics, analysts have agreed that a moderation appears to be the only way forward. Now, this was contained in multiple macroeconomic updates from investment houses on the inflation numbers. Now, the September 2025 inflation figure printed at 18.02%, marking the 6th month of consecutive decline. The analyst at Cowrie Assets Management projected that headline inflation would further ease to 17.83%, supported by continued naira stability, improved FX liquidity, and sustained food supply from the ongoing harvest season. Now, although the upward adjustment in PMS prices in early October introduced mild cost pressures, now the overall impact on headline inflation should remain limited due to petrol's relatively low weighting in the CPI basket. United Capital, in his own inflation watch, projected that Nigeria's headline inflation rate will fall to 16.30% in October 2025. Now, the moderation was hinged on falling food prices, a stronger naira, although it noticed that an increase in energy prices will exert some pressure on consumer prices. Well, let's start the week, and my guest is Mr. Tajuddin Ibrahim. He is the Director of Research and Strategy at Chapel Hill, Denham. He starts the week with me on Business Nigeria. Good day to you, Mr. Ibrahim. It's good to see you today.
You too. Thank you so much for having me on the show today.
Yes, we are waiting with bated breath for the NBS to give us the figures from for inflation for the month of October. So I would allow you to take us through what's been the projection or prediction from Chapel Hill, Denham with regards to inflation figure for October 2025, considering the trend that we've seen.
So the trend that we have seen has been a remarkably positive trend if you look at it over the past, couple of months now. And at Chapel Hill, Denham, our forecast is 16.2% for the month of October, which signals sustained disinflation, largely on the back of the stability, or let me even say the appreciation of the naira against the US dollars. And also bearing in mind that we have a situation where food harvest, is expected to remain supportive of moderation in the inflation rate. And when you also consider, what we are seeing in terms of energy prices, the higher energy prices we are seeing a form of downside risk, no doubt, but the reality is that, the weight of energy in the entire basket is not as much as the weight of food, for instance. So it is a situation where I see local food production remaining supportive of our disinflationary trend, and also the appreciation of the naira against the US dollars and other major currencies across the world, also being, playing a supportive role in the expectation around sustained disinflation for the month of October. I think in summary, we are expecting 16.2%, down from around 18% in the month of September.
Well, it's a good to start off the conversation, really. But you've mentioned one worry that I have was also in my introduction is the price of petroleum products, and you also talked about that. We've seen a bit of shift on that side. Would that not put a bit of pressure on the price of on the general inflation basket? That's one. We're talking about local refining being improved, reducing our dependence on imports and all of that. But the 15% tariff, or should I say tariff that's supposed to be on imported fuel, has also been reversed by government, and this has also generated mixed reactions. So how would you react to both of this and what it means for inflation moving forward?
I think if we look at the impact of all of these policies on inflation, the broad expectation will be that inflation will still be lower in the month of October relative to the month of September. The major element in the entire consumer price index is food. And the moment we continue to see sustained disinflation in food, we really would not see any other sub-index, particularly the energy index that is being referenced as we speak. We will not see it taking a larger impact or having a larger impact on the consumer price index compared to what food has in terms of its components and also in terms of its impact. And I think also we should bear in mind that the energy price increases that we currently are seeing is not something that is here to stay, and it is also something that will be dependent on global crude oil prices. And I think the impact we are seeing from energy price change is largely driven by crude oil prices and not so much of exchange rate volatility, because we have seen the naira strengthened much against the US dollars. So and that is in itself is an indication that the outlook for energy inflation in itself is more to the downside than upside. And when you talk about the 50% tariff that has been suspended by the government, I think it is in the spirit of a healthy competitiveness or competition in the industry, because that tariff was interpreted as a situation where the government is looking to pave the way for monopoly to thrive in the market, which I believe was not the intention of the government. So to avoid misinterpretation of that strategy, I believe the government was quick in suspending or completely reversing that 15%. And I reckon that over time, it will become a lot clearer to Nigerians even, which of the products they should be buying. Should they be buying locally, produced petroleum products, which to my mind will become cheaper over time, in as much as the refineries are able to get crude oil locally, or should they be buying imported petroleum products, which to my mind is tied to two key elements. Number one is the volatility that we see in global crude oil prices. Number two, and possibly even more importantly, is what happens to the exchange rate. And don't forget that when you build local refinery capacity and you supply more of crude oil to the local refineries, what it implies is far beyond the movement in the prices of petroleum products that you would see over time. Because number one, what you are doing is that as a country, you are accelerating the growth of your local production of goods and services. Number two, you are protecting your exchange rates from volatility, because what it implies is you are localizing the value chain of the petroleum products, which means there will be little or no pressure on the naira to the dollar in terms of exchange rates, because if you need to import huge volumes, you are going to put a lot of pressure on the naira against other major currencies across the world. The final element to my mind for consideration is the impact that will have on the aggregate output for the economy, and importantly also the ability of those refineries to export for FX earnings into the country. So I think it goes beyond looking at just 1 month. To my mind, the benefits are a lot enormous and substantial and will be growth accretive for the economy over the medium to long term. All that we need is to increase our crude oil production and support all of those refineries that we have locally so that all of these benefits will accrue to us as Nigerians.
Has released the figures, so it's out. Breaking news, let's put it that way now because it's just out from the NBS, fresh, and we're serving it hot. Inflation for October 2025 eases to 16.05%, a significant decline from 18.02% recorded in September 2025. And this newly released data, month-on-month headline inflation stood at 0.93%, indicating a slower pace of price increases compared to previous months. Mr. Ibrahim, over to you.
So interestingly, this number that you just read out as we are live, indicates a far better, inflation number, which is, as you read out, is 16.05%. It is far better than, our expectation of 16.2%. And I reckon that the major element for consideration here is the relatively slow pace of the month-on-month increase in the consumer price index to around 0.9%, just like you mentioned. So what really matters to my mind is for us to be able to sustain that level of monthly inflation through the end of the year. And if we are able to deliver on that, we most likely are going to end the year and also start 2026 on a benign note when we talk about inflation expectation. Don't forget that when you have much lower inflation, what most likely is going to happen is that you have also much lower interest rates. And the lower interest rate goes, the better for the economy, particularly for businesses to borrow, for them to be able to embark on expansion activities, and also for even individuals or retail customers of banks, in this case also, to borrow for consumption if there is need for that. So all of these elements in my mind are moving in the positive direction and the outlook remain positive.
Now, policy interventions, improved supply conditions, and stabilizing market dynamics. Some say this is beginning to yield positive results. How does that also come to you, Mr. Ibrahim?
So it comes to me as a positive one, because if you look at policy implementation, one of the major policies that we continue to appreciate is what we currently are seeing in terms of the Naira for crude policy, particularly when you talk about the oil and gas sector, where the local refineries are being supported by policy to ensure that they are able to pay Naira to get crude oil from the country. Because even if we look at it, we spend Naira in this economy, and we are also the producer of the crude oil. So it makes some economic sense for them to be protected on that front. So that's, in my mind, is a positive one. And I think also, if we take a step further, what I believe we should also consider is how are foreign institutions viewing us? How are they looking at us? Foreign institutions, in this case, I mean the credit rating agencies, I mean also the foreign investors. If you take a look at the recent developments that we have seen from those two sets of institutions, what you would agree with me is that on the credit rating side, we have seen an upgrade across the three major credit rating agencies, upgrading our credit rating in the country, which is a positive one. It is one thing for you to view yourself internally and believe that you are doing well. It is another thing for external people to view you and say to you that your policies are working and they are delivering the expected returns. the expected results. I think that is what we currently are seeing. S&P recently just upgraded our outlook in terms of credit rating. We had before that Moody's and also Fitch rating. So when you bear that in mind, they are like supporting what the government is doing around reforms. No doubt there are rooms for development, but the reality is that it has been so far so good.
But when we look ahead, and that's almost finally now, the dirty December that we talk about and much expected spending, expectations, large gatherings and all of that in the month of December. What do you think that would give us with regards to inflation? So we expect November and December inflation. Now we also have an MPC meeting. I think that should be next week or something. I think it's next week, Monday and Tuesday, I guess. It should be towards the end of the week. I think it's 21st. I'll confirm that date. But I know there's an MPC meeting for the month of November. If that is happening and we have inflation at 16.05%, what do you think would form discussions around that table by the time the MPC and, of course, the members of the committee meet?
Let me start very briefly by mentioning the fact that the Monetary Policy Authority and the Fiscal Authority, based on what we have seen so far, working a lot more together, as we speak. And I believe, the work and the collaboration will deliver, stronger results over the medium to long term. It is on the back of that I believe Nigerians should be expecting about 100 to 150 basis point cut in interest rates when the Monetary Policy Committee of the CBN meets later this month. What would that translate into? It will translate into lower cost of borrowings for businesses. As we speak, we have a lot of corporates who have been on the sideline wanting to come to the capital markets to borrow money, to issue bonds for long-term projects. Some of them are going to come to the market, and that will be positive in terms of the impact it will have on their business and the overall economy. The next thing to begin to think about is how much more cuts can we see going forward. I think by next year at the beginning, we most likely are going to see sustained disinflation, and that will also support the ability of the CBN to further cut interest rates. Talking about dirty December, I think we should all be worried if by December we don't have a really dirty December, because it is natural for consumers to consume more due to the festive period. So we most likely are going to see that materialize. And I think in terms of the impact it could have on inflation, we should expect the Central Bank of Nigeria to act in terms of liquidity mop-up, in terms of mopping up excess liquidity in the financial system. Because when you spend more, you are most likely, going to have a situation where money in circulation increases rapidly. And with that, we have the central bank there to take care of any excess liquidity in the financial system. So I reckon that inflation may go up in December, but it will not roll back all of the gains that we have seen year to date and going into 2026, in my view.
A great one. Now, finally, the implementation of the tax laws. Back and forth. We are now seeing developments around the capital gains tax or something that has been on the front burner for some days, where we're still having series of meetings and all of that to address some of the shortcomings around this. Just like we had the PIA before it was passed, and we still have some challenges with it. Now with the new tax laws, we expect implementation from January. How seamless do you think this will be?
I think it may not be that seamless in terms of implementation at the beginning, considering that this is a dramatic, shift and a significant one indeed, but a positive one away from the way that we were, implementing our tax laws previously. So you would not expect perfection from day one. So you would not expect perfection from year one of the implementation. So that will be success to my mind, but that success, maybe some percentage, maybe 75 or a little above that, and in terms of, success of implementation, or it could even be lower, depending on how, how much the government is able to implement it. But I think going forward, we should see an improvement in the success rate in terms of the implementation of the new tax laws. And if we look away from the implementation, I reckon that we should have a positive view around the tax laws as Nigerians over the medium to long term. And by that, I mean looking from the next 3 years onward. Nigeria at some point will be a lot more robust in terms of the ability to generate revenue. I mean the government in this case. And when you are able to generate a lot of revenue, largely because your tax laws are effectively implemented, it implies that you will depend less on debt issuance. When you depend less on debt issuance, what we will see most likely is that interest rates, naturally speaking, will be moderating across all the major segments of the market. And when interest rates moderate, it gives room for more businesses to borrow, more businesses borrowing to embark on capital projects implies an improvement in output. An improvement in output can lead to job creation. When you create more jobs, you are supporting the growth of the pension business. When you support the growth of the pension industry, eventually you are supporting the overall growth of the economy, because the pension industry is where many financial institutions and companies go to borrow long-term money, because that is a long-term industry. When you borrow long-term money, you are able to implement a lot of expansion and new businesses as a country when we talk about the private sector growth. All of those elements in my mind are in the positive in light, particularly when we view the implementation of the tax laws from a medium to long-term standpoint and not so much of short-term. Those are my views.
I must thank you so much, Mr. Tajuddin Ibrahim, there, Director Research Strategy, Chapel Hill, Denham. Thank you for starting the week with us on the show. We appreciate this.